This is probably an example of biases more than anything actually, but I wanted to show you it because a good example came up on Thursday, Thursday the 29th of March 2012 in the ES. I've got a 5-minute chart with the full Wednesday session, which overall was a down day. And a little bit of the Thursday session and a full daily candlestick RTH session only, so that's 405 minute candlesticks here, and you can see the two red candlesticks. This one on Wednesday did trade back up, but it still finished down, and it was still a negative, especially considering the open on Thursday, which was at 1392, and we can see there it was right on that Wednesday low. So what normally happens with gaps is they either try and close them a little bit more than we did here, or if they can't close them, they go with them. We tried to close it a little bit, and then we actually sold off a little bit and couldn't even hold back in the Wednesday range to build some activity and build a base to then ultimately close the gap and move higher. So there would have been every reason to get short at some point, maybe within this first part of the move, maybe at this pullback here about 91. And that's what I'm going to assume that we might have done. Would have been a decent trade, and there would have realistically been a reasonable target around here. You can see I've marked a zone in blue, simple zone, just 80.5 to, well, probably 82.5, this sort of area, and that wouldn't have been an unreasonable expectation. Now, at this point, having moved down the day before, tried to get back up, and then failed to get back into that range after opening lower and failing to close the gap, we would have thought that that would be a reasonable amount of downside momentum. So if you have that bias, you might miss some of the other signs, and that's the key thing, not missing those signs. And really, you can see that after maybe we've taken the short there or around here, really we've been moving sideways here for too long. And another point here was we went through one tick only from the previous low here. So that low was 86.5, and then we took it out just by one single tick and then started moving back up. Not a lot, but we did. So had that then been taken, it would have been negated, but potentially a reversal low had we started moving back up. Now this is all very well and good, but like I said, if we've got a position, we've got a bias, it's possibly more difficult to spot. But this is the key, that there's so much upside potential if it fails to then follow through, breakdown, that spotting it quickly is important. You can see that we just continue to move sideways, and we do pop up a little bit here, and we test this 91. So anybody who's short here is thinking, hang on a second, what are we going to do here? Let's hold on. Oh, it's moving back down. Great. But then, as you can see, it doesn't really move much lower at all. In fact, it makes a higher low, 88.25, before then breaking back into that range. And that's a really key sign that we're going to then try and test some more of the gap here, and possibly even the whole gap, and that is exactly what it did. But you can see, had you spotted that early, around here, you see the move back up, you would have been either getting out around here, or you would have been getting out on this retest that it just couldn't sell off any further. And had you had the plan for a reversal, you may have even been able to get on along early on, and you can see that was the biggest move of the day, from overall this bottom 86.25 or even 88.25 right up to 99.75. It was just a much bigger move than this first move down. So that's why spotting things early is really important. I hope you gain something from it, and I hope you can use it maybe to help your trading. Thanks for watching.